The CME is the Chicago Mercantile Exchange. It is, I don't know if it's the biggest or one of the biggest exchanges in the US, but on there they have a bunch of crypto options. And obviously, famously, for years and years and years, they have had Bitcoin futures. They also have Ethereum futures. So there's actually, an Ethereum CME chart. Solana. I don't know about how many others there is. I don't know exactly how many crypto assets they have trading on there, but obviously famously, Bitcoin has been on there for a long while. So a CME gap is formed when one of two things happen. So the CME is closed for 1 hour a day. Let me just check for when that 1 hour is. I think it's 10 or 11 o'clock Chicago time. So I can't remember exactly which one it is, but it closes for 1 hour every single day. Now it also closes on weekends. So it also closes Friday night. Again, I think it's around 10 o'clock. Obviously, someone who knows that for a fact can correct me. And then reopens Sunday night. So the time in between these two things, now you can get a CME gap opening through the week, obviously in that 1 hour. If we have a big piece of volatility in that 1 hour that it's closed, it will create a CME gap actually midweek. But obviously, most of them come on a weekend. So when the CME closes of a weekend, let me show you. So I'll tell you exactly when it closes as well. So here, so you can see here, obviously the gap that was created. So the last trading hour was from 9 o'clock to 10 o'clock UK time on Friday night. So obviously 10 p.m. strikes, the CME is closed, and then obviously Bitcoin trading on the CME is finished for the day. Then it reopens Sunday evening at 11 p.m. UK time, which then obviously, as you can see, created this gap here. So that finished trading at around 112k, just a bit above. And then it actually opened at 111,325. Now, this is obviously CME prices. There is a bit of a premium on the CME at the moment, and has been for a while, of around $400 to $500. So these prices, if you went and looked at these times and these candles on a crypto exchange chart, they would differ by a few $100s. So just something to note. But then obviously that creates a gap. And then obviously famously, for years and years and years, Bitcoin has gone on to close them gaps. Now, obviously, not all of them have been closed in history. I think there's one open at 9K. I think there's one open at like 20K. But more often than not, they close. Now, obviously, if it's a very small one like this, typically, they will close on the same day or maybe the day after. Now, the bigger ones that are left behind can take months and months, if not years, to close. So, obviously, Exhibit A is the CME gap so as you can see, we still have one open from 91 to 92k-ish here. So that remains open. So that hasn't been closed. We also obviously have this one open. You can't exactly see the gaps on the daily chart that much, but we'll zoom in on the hourly chart. So you can see obviously this one is open. So all the way up to 117k, just above. But obviously famously this one that was left behind. So you can see here, obviously Friday comes. The CME closes at 77,400. Then when the CME reopens, obviously it says Monday, but it is obviously technically an hour before Monday, Sunday evening. Then the CME opens at just above 81k. And obviously then Bitcoin just shoots up and carries on going, creating this gap. Now, obviously this took 4 or 5 months to close, but obviously it did close eventually. Yeah, you can see here, obviously we closed most of it there, and then here we came back for all of it, full closure done. So they can take a long while to close, and they can stay open for months and months, weeks. Obviously, some of them have been open for years, like the one down at 9k. But yeah, so that's what we're looking at. And obviously, it's, a very strong eye for the market to look at them CME gaps and look for them to close. And, obviously can lead into a trend one direction into closing the gap, but then offer potential for then, straight trend reversal to then hit it the opposite way. I hope that is a good explanation for you anyway, Fowler. Do let me know if that was sufficient.